Shares of Diamondback Energy surging after announcing that merger with Endeavor Energy Resources. According to the release, the combination will create a premier Permian independent operator. You see that stock up roughly 10% now. This is the latest in a slew of deals for the energy space. And here to discuss the potential of this deal for Diamondback's future in the Permian Basin, we've got Tim Rezvan, Keybanc Capital Markets Managing Director. Tim, Inez just walking us through the slew of M&As that we have seen in this space. How does the one announced today rank in the bigger picture?
Well, I think when you look at from the buyer's perspective, Diamondback is almost doubling from this acquisition. So it's extremely transformative. Exxon buying Pioneer, it doesn't have the same impact to Exxon. So it's really a tremendous deal. A couple of things to point out. I think Inez had a lot of the points correctly. The cultural fit here is really important. These two companies are headquartered literally across the street from each other in the very big small town of Midland, Texas. So integration should go pretty well. And as far as the stock price performance you're seeing today, in our view, it's warranted. The market is putting a pretty clear correlation between size and trading multiple. So the extent that Diamondback is nearly doubling its size, it warrants, if you assume a good integration, it warrants a higher multiple, all else equal.
So Tim, you highlight the cultural similarities between these two companies, given where they're both based right now. How do you think about the overlap? I mean, to what extent does this make sense given how both companies operate right now?
Yeah, I mean, Endeavor's biggest asset, most of the company, is what they call core of the core rock in the eastern flank of the Permian in the Midland Basin. And when you look at the acreage positions of the two companies in the most active, most productive areas of the Permian Basin, it's areas called Martin County, Midland County, just huge ability to kind of put together these acreage positions. So there is natural sort of geologic sense. And Diamondback, part of its reputation has been as a company that's been low on the G&A side, low on the cash OPEX side. So that model overlaid on Endeavor, should drive incremental free cash flow, and that's part of the synergies that are being cited in 2025.
How big is the regulatory risk for this one? Should investors be concerned about approval?
Yeah, I'm not a regulatory expert, but the FTC has clearly been, fairly antagonistic, towards energy mergers. Pioneer and Exxon have, I believe, they've been asked to provide more documentation on that merger. But the Permian remains, a fertile activity area. There are literally dozens of operators there. So it's hard to view any sort of monopolistic kind of powers that would be derived from this merger. So I'm sure that the FTC will create some work for the lawyers, but we don't see that stopping the deal.
Tim, you've already got an overweight rating on the stock when it comes to Diamondback, price target of $170 a share. I mean, we're inching closer to that already. If you sort of expect a smooth approval process here in this particular merger, do you stick to that, or you think additional catalysts can push that stock even higher?
We're not allowed to foreshadow ratings changes. I would say we're in the very early innings of reviewing our model. Our, price targets reflect inventory depth and quality, which you would assume would be all else equal going up. And then obviously valuation metrics, free cash flow generation are all sort of part of the recipe. So we'll go back and take a look at this. But I would say another important sort of driver of this deal, which we liked about it, is Diamondback is one of the few E&Ps that were up in absolute terms in 2023 in a choppy year for the market. And part of this, the re-rate in shares, was because it was perceived as a takeout candidate. So what we found pretty attractive here is the company is nimbly using that equity currency that it gained in 2023 to kind of make this deal and help it get structured attractively.
Finally, Tim, and as sort of alluded to this land grab that we have seen in the Permian Basin, if you will. But the broader narrative in the energy space has been about where the peak is for oil and gas. You've got those like IEA saying it's 2030. Obviously, those within the energy space, plenty of disagreement on that. But can you talk to me about the two competing narratives here? I mean, on the one hand, we are seeing this consolidation happening in the Permian Basin, this grab to be able to get additional supply. And yet the counter narrative to this is also that that peak is coming pretty soon. I mean, how do we weigh the two?
I would push back on this narrative that the peak in oil demand is coming soon. We would, broadly speaking, push back on anything that IEA publishes. We found them to be a pretty low credibility. We feel like there's a political agenda underlying a lot of their publications. If you want to look at what the smart, connected people are saying about oil, I would look at the Chevron Hess acquisition. I don't cover either of the names, but in our view, that clearly looked like an opportunity for Chevron to get into one of the biggest oil discoveries we've had in decades globally. So that speaks to sort of their view on peak oil demand and their interest in kind of participating in that next discovery. So I think the issue here is preserving asset quality, inventory quality. You can step down in quality and see a lot of like gassier, less productive intervals that companies will be able to drill in higher price environments. But in this sort of steady state environment, we believe this adds, degradation is a big theme in the industry with well results. And you would think that this acquisition should help help Diamondback push that off for many years.